Hey everyone, this is Purti. Today let's get down to where the rubber meets the road and let's make our first trade. I personally believe in practical experience and thought instead of giving you a dump of knowledge, let's take it step by step with an actual stock and grow our wealth and knowledge together. To get started, we need to first do our homework. Here's a good time to pause and get yourself a pen and paper to take some notes. The first thing we need to do is check out the viewpoint of the government. That is, we need to check out the monetary policy, the debt policy, and the government policy. Starting off, let's focus on the monetary policy. Currently, the Federal Reserve is committed to creating maximum employment and price stability, which in common understanding means that the Federal Reserve is rolling out the currency printer. This is being done in the form of giving out loans by having an extremely low interest rate of 0 to 0.25% and hence making credit easily available to the general public. Obviously, as credit becomes cheap, people are willing to spend more at a lower interest rate, which obviously causes inflation. The Fed is trying to target an average inflation of about 2%. The focus is on the word average, not on this monthly spikes in inflation. In the latest Fed release, we think that this policy of cheap credit will last until the end of 2023. Next, moving on to the debt policy. The Fed is going to increase its treasury securities by $80 billion a month and mortgage-backed securities by $40 billion a month until maximum employment is reached or inflation is at 2% average. To summarize the monetary and debt policy, an estimate of about $120 billion a month or $4.3 trillion is to be injected into the economy by the end of 2023. Expect the price of assets to rise over the next 3 years. Next, let's talk about the government policy. From the stock market perspective, the new government is expected to provide huge incentives to green energy, green autos, green infrastructure, and wireless broadband or 5G. Now, before we jump into choosing a stock to place our trade, let's understand a few commonly used terms in the stock market. One is the bullish market. This is a term we use when the market is trending upwards. Next is the bearish market. This is a term we use when the market is trending downwards. Next is the support line. Support is the price level at which the demand is thought to be strong enough to prevent the price from declining further. Let's look at an illustration to understand this better. Let's take a stock XYZ. It was at a price point of $55 at the start, and in Jan, it hit $60. It rose to about $65 in Feb and fell to $60 again in March. The stock has been continuing to rise and fall till July, when it again hit the $60 price point. This $60 mark is a significant number as the stock has held this support for more than 2 times. The $60 mark is nothing but the support line or the floor, where the market thought that the stock is oversold, but not so oversold that it falls below the $60 mark. Next is the resistance line. Resistance is the price level at which selling is thought to be strong enough to prevent the price from rising further. Let's take the same stock XYZ, but in a different scenario. The stock started off at a price of $50 and it rose to about $60 in March. The stock has been continuing to rise and fall till June, when it again hit the $60 price point. Notice that again here, this $60 mark is a significant number as the stock has tried to break this mark for more than 2 times. This $60 mark is the resistance line or the ceiling where the market thought that the stock is overbought, but not so overbought that it breaks above the $60 mark. Next is the candlestick. A candlestick is usually a representation of a stock's price movement, usually over one day. A green candle indicates that the stock is bullish. The two wicks of the candle on either side are the highs and lows of the day, and the stock has moved between these prices over the day. The lower part of the candle indicates open, which is the price that the stock was trading at when the market opened for the day. The upper part of the candle indicates close, which is the price that the stock was trading at when the market closed for the day. The red candlestick indicates that it is a bearish stock. It is similar to the green candlestick except that the positions of close and open have reversed. The length of the candlestick represents the buying and selling pressure. Next is the sector index. Sector index is a consolidated chart of all the companies in that sector. For example, in technology, it is called XLK. Financials is called XLF. Home builders is called XHB, etc. Next, let's talk about what tools to use to actually place our trade. You could use Thinkorswim, TD Ameritrade, E-Trade, etc. Or if you're in a different part of the country, you can choose the one which you're most comfortable with. Usually the only difference I've seen is that the UI, but most of all the functionality is present in every tool. I like to use Thinkorswim because it offers something called as paper money or virtual trading, which simulates a real world trading environment. Initially, when I started off, I started experimenting in this virtual environment, before I was ready to jump in and invest with my real money. Let's see what it looks like. First of all, you might want to apply for this account if you don't have it already. Type in your username and password and use this toggle feature to toggle to paper money from live trading. After logging in, you will see this dashboard. Don't be overrun by looking at this. We will talk about all of these in detail in future videos. But for now, let's just focus on where my mouse is currently pointing at. Notice that we are in the simulated trading environment. And notice that we have about $250,000 in virtual money. We can use all of this money to place our trades and lose it all if you wish, and reset it back to the same value to place your next trade. But for now, let's just focus on the stock charts and minimize all of these windows. To pick our stock, we first need to find out how our sector is doing. For example, let's take a stock AMD. AMD actually belongs to the technology sector, which is XLK. Let's type in XLK. If you look at this chart pattern, the sector index has been doing really well. It has been bullish for a very long time here, and it has been rising ever since March of 2020. It fell a bit in the month of August, and it has been only rising ever since. So my perspective is generally bullish around this sector. So let's now take a look at our stock, which was AMD. AMD stands for Advanced Micro Devices. Now, this is the stock chart for AMD. As soon as I look at this chart, I see a lot of patterns. It's okay if you are not able to see it right away. I'll help you find them. Let's talk about this period of time frame, that is the Feb of 2020. The stock actually touched the 59.38 mark approximately. Now, around this time, which is the April of 2020, it tried to touch the same mark again, approximately the same mark. Again, here, around the June of 2020, it tried to touch. Again, here, around the July of 2020, it tried to touch again. So let's just join all of these and see what pattern we are talking about. So let's say this is a approximate line. This 59.38 mark is the resistance mark. The stock has tried multiple times to kind of break this mark and actually move upwards, but it has failed multiple times over here. Notice that the stock has also reached a low of 36.75 around the March of 2020. So this line of 36.75 is our new support line. This was the resistance line and this is now the new support line. These are also called as pivot points, where you usually try to get into trades around these levels. Typically, breaking major resistance points on the upside leads to what is commonly called as a breakout, and breaking the support side in the downward fashion is a breakdown. Looking for these breakout and breakdown patterns are extremely powerful in trading. One thing that I often found is that more the number of tests and retests of the resistance or support levels, the more powerful the breakout or the breakdown is. No one can really predict as to when the stock can break out or break down, but one might have like a guesstimate as to when they can move in either directions. Enter the catalysts. Catalysts are primarily news-driven events. This could be like earnings report, which is great, or bad earnings report, changes in the federal policies, downgrades and upgrades from analysts, and many more things. So let's go back to this chart and see the pattern again. You would usually try to place your trade at around these levels. So let's say you were on the 17th of April of 2020, that is around this time. You wouldn't know what was happening to the stock market after this period of time because you only have the history. So let's say in the history, it has tried to touch this 59.38 mark, as mentioned before. So you would try to place a trade around the same mark, but with the condition that you would place your trade only if it breaks above the 59.38 mark. There's a 50% chance that the stock could go up or go down. This is usually a guess that you might have to do, but this is a informed guess or an informed decision that you will want to take. So let's say you were again at this particular period of time, that is the 17th of July of 2020. Now again, you wouldn't have an idea about when the stock would actually break out at this level, so you would only have the history of the stock. As the history suggested, the stock has tried to reach this level at multiple points and multiple times, but it has failed to break this mark. Now you would try to place your trade around this mark again, with a condition that you place your trade only if it goes above the 59.38 mark. Now, it was during this time that there were some catalysts which were positive. That is, the government was trying to promote stimulus and stimulus checks. So this is positive news for the stock, and the stock actually broke out of the 59.38 mark and rose all the way up until about 94.54. Now, if I examine this chart further, I am able to see more patterns or more support and resistance levels. For example, the 73.75 mark is another support line. Let me quickly draw a trend line over here. Approximately the 87 mark or the 87.52 mark is another resistance line. You usually try to again place your trades around these points, which are also known as the pivot points. If you notice, around the August of 21st of 2020, that is 3 days after August of 21st, the stock actually broke out of the 87.82 mark here, but it didn't keep its momentum going and it actually fell back down. This is also known as a false breakout, where it shows all of the characteristics of breaking out, but it actually doesn't break out because it loses steam. If all of this becomes confusing, don't worry. As we do more examples of stocks, things will become clearer. But for now, understand what are resistances and supports. Higher the resistances and higher the supports implies bullish trades. Lower the resistances and lower the supports implies bearish trades. Looking at this entire stock chart, I feel bullish about AMD because let's say we are here and this is the latest candlestick of the last market when it was open, and I feel that the stock has significantly sold off since it hit the 97.98 mark. Since I see a green candlestick, I feel that there is a good chance that the stock might go up from here. So let me place a trade and let me chip in about 10 stocks of AMD. Let me show you how it is done. Right click and say buy. The default says 100 AMD, but you need to edit it. Let's make it 10. And currently the stock is trading at 91.81 mark. So let's put it at 91.81 and hit confirm and send. Let's hit send again. And yay, you actually just placed your first trade. Now, after buying the stock, you need to have an exit plan. That is, when do you actually want to get out of the stock? So, if the stock goes, let's say, below the 90 mark, around the 90.55 mark, let's say, I would kind of get out of the trade, or I would kind of sell off all my stocks, AMD stocks. Or let's say it actually rises, the stock actually rises and it hits about 97.98. I would want to gather all my profits and sell the stock at 97.98. Is there a possibility that the stock can actually go beyond 97.98 mark? Definitely. So let me pick your brains a bit and let's just assume that the stock is actually going to cross the 97.98 mark and it kind of hits the 100.99 mark. That's actually a 10% gain. Here, instead of selling all my 10 stocks, I would rather sell only 9. Why, you may ask? Here's the math. Your total initial investment is 10 times 91.81, which is 918.1. Your total sold investment at the 100.99 mark is the 9 times 100.99, which is 918.1. Total taxable income is 0. But what you're actually left with is one free stock. Please keep in mind that I'm not a financial advisor or a CA. I'm just a dudette on YouTube. I make this video with a point of view of spreading my financial knowledge. If you're still here, I commend you. Congratulations on placing your first trade. Just as a quick recap, before placing a trade, we need to look at the government's viewpoint with respect to the monetary policy, the debt policy, and the government policy. We need to analyze the stocks with the sector index, candlesticks, stock charts, and patterns. We learned how easy it is to place a trade and when to position yourself in the trade in the support and resistance level or the pivot levels. As always, please don't forget to leave your comments and suggestions or ask your questions below. My sincere hope is for you to find fulfillment in your lives. If you like this video, don't forget to like, share, and subscribe, and hit that bell icon for more videos on financial literacy. Thanks for joining me today, and I'll see you all in my next video. Bye-bye.